Good afternoon, good evening to all of you joining us from around the world. My name is Mathilde Mesnard. I'm the Deputy Director of the OECD Environment Directorate. And on behalf of the OECD, I'm very delighted to welcome you all, policymakers, investors, practitioners from across the water and the finance communities. So welcome to today's Green Talks live webinar on scaling water security investments through bond markets. Your participation today reflects that there is a growing and shared, definitely, understanding that water security is moving to the center of the economic agendas, of the financial agendas, and the climate resilience agendas worldwide. Water security is increasingly recognized as a foundation for economic prosperity and for stability. And it underpins, as we all know, food systems, but also energy production and industrial activity, and also public health and ecosystem resilience. Yet, despite this really critical importance, investment in water infrastructure, in water services or water resources management, this investment remains well below what is needed. And climate pressures, aging infrastructure, and the degradation of ecosystem are all like intensifying these needs. And what we see is that the financial flows remain insufficient to meet these needs. So this growing gap cannot be closed by public budgets alone. Clearly, what we need is to mobilize private capital at scale. And this will be absolutely essential to accelerate the progress and to strengthen the long-term water resilience. And just as importantly, these investments must not only be sufficient in volume, but they need also to be well structured and well designed to ensure that they deliver lasting impact. Today's webinar is particularly timely as we launch the OECD report called Financing Water Security Models and Approaches for Investments That Last. This report brings together analysis on different financing approaches that can help improve the quality and the durability of water investment outcomes, while also expanding access to capital. This publication, by the way, is freely available via the link in the chat of this webinar. And of course, we warmly encourage you to explore it in more details after the session we'll have. Over the next hour, we'll focus on bond financing, more particularly. One chapter of this report has one of the key instruments and a central pillar in the broader effort to mobilize capital at scale for water security. And we'll explore how bond markets can be leveraged more effectively to channel the long-term financing into freshwater-related investments and what this means in practice for both the investors and the policymakers. So we are very pleased to be joined today by an outstanding panel of speakers representing credit rating agencies, commercial banks, and development finance institutions, key players on this agenda. So let me join me in welcoming Luisina Berberian, Director of Sustainable Finance at Standard & Poor's Global Ratings. Also, Constance Chalcha, Chief Sustainability Officer at Global Markets and Board Member of BNP Paribas Corporate and Institutional Banking. And last but not least, Mohamed Sharaf, Treasurer at the Treasury Department of the Islamic Development Bank. So what we'll have now is further introduction remarks by my colleague Walid Wislati, Head of the Climate, Biodiversity and Water Division at the OECD, and a presentation of the report by its lead author, Aude Farneau, who is a policy analyst in this division. And after these two interventions, we will have our panel discussion, basically on how bond markets can help scale water security investments. After that, we'll have an open Q&A session. So I really encourage you to already submit your questions at any time during the webinar, throughout the talk and throughout, both the presentations and the panel discussion using the Zoom Q&A function. So again, thanks for joining us. I look forward to a very rich discussion. And I will like now to invite Walid Wislati to deliver his introductory remarks. Walid, you have the floor.
Thank you, Mathilde, and welcome to all of you. It's a really pleasure to see such a strong and diverse audience joining us today's Green Talk discussion. Um, Today's event is part of OECD broader work on financing water security through the Roundtable on Financing Water. The report we are launching today is the result of a close collaboration between the OECD, the Islamic Development Bank, the government of the Netherlands, and the World Water Council. Together, we have worked to identify practical financing approach that can help mobilize investment at scale and pace required to respond to the growing water challenges facing countries around the world. When we talk about financing water, the conversation often begins and sometimes ends with the investment gaps. There is no doubt that closing this gap is essential, but the amount of finance mobilized is only part of the story. Equally important is how that finance is mobilized, how we invest, how our investment are structured, and how are risks allocated between public and private sector, and how are incentives designed to encourage long-term investment. These questions are fundamental because they determine whether the investment will deliver lasting environmental, social, and economic benefit. This is precisely the perspectives taken in our report. It examines four financing approaches that have considerable potential to strengthen water security, bond finance, public-private partnerships, result-based finance, and Islamic finance. While each follows a different logic, they are a common objective: to attract capital, more effectively improve project viability, and deliver strong long-term outcomes. Today, we will focus on the first of these approaches, bond markets. Bond markets have enormous potential. They can mobilize a large volume of long-term capital that are well matched to the long investment horizons of water infrastructure, but also on water resilience projects. Sustainable bond markets have expanded remarkably over the past decade, yet water still represents only a relatively small share of overall insurance. Even blue bonds, one of the fastest growing segment, remain largely concentrated on ocean-related investment rather than freshwater security. This suggests that there is a significant untapped potential. Our report identifies reason for optimism. Investor demand for sustainable assets continues to grow. Policy frameworks are becoming more supportive, and the increasing recognition of climate resilience is increasing new momentum for water-related investment. At the same time, important barriers remain. These include limited transparency on the use of proceeds, concerns about the stability of revenue streams, regulatory complexity, and in an uneven development of capital markets across countries. The encouraging message from the report is that these barriers are not unsurmountable. It highlights a range of practical solutions, from stronger standards to clearer taxonomies, to more robust impact reporting, as well as financial instruments such as credit enhancements, blended finance mechanisms, and targeted fiscal incentives that can improve risk-return profiles and broaden the investor base. These are precisely the issue we will explore with our distinguished panel today. Which bonds instruments offer the greatest potential to strengthen water security? How can water-related bonds evolve beyond their current applications, and what policy and market reforms are needed to unlock investment at scale that the challenge demands. I'm delighted that we have such outstanding group speakers today to help us address this question. Thank you all for joining us today. I look forward to what I'm sure will be a rich, engaging, and thought-provoking discussion. Thank you. Back to you, Mathilde.
Thank you, Walid, for setting the broader context. And without further ado, I would like to go to the presentation of the key findings of the report. So please, Aude, the floor is yours.
Hello, everyone, and thank you very much, Mathilde, for the introduction. It's a pleasure to present to you some of the key highlights from the chapter on leveraging bond finance for water investments, which is a key chapter of our new OECD reports on financing water security models and approaches for investment that lasts. Next slide, please. So first, a few words about the report we are launching today, which you can download using the QR code shown here. These new OECD reports look at how financing models can be better designed to make water investments more viable and effective. Its core message is that how finance is structured matters as much as how much is mobilized. Improving water security requires rethinking not only how much we invest, but how we invest. And this includes better aligning incentives with long-term outcomes, strengthening accountability for results, and mobilizing underused sources of capital seeking impactful opportunities. The report explores 4 complementary financing models and approaches, as we said, with strong potential to foster greater viability and effectiveness of water investments, including bond finance, which can mobilize long-term capital at scale, public-private partnerships, which can support infrastructure delivery when risks are appropriately allocated, results-based financing, which links funding to measurable outcomes, and Islamic finance as a growing source of impact-oriented capital. Of course, I'll only be able to touch on some of the key messages today, but I warmly invite you to explore the full reports, which goes into much more depth on the tools and examples we've brought together. Next slide, please. In this presentation, I'll present, as I said, key findings of the chapter focusing on bond finance for water investments. First, covering different types of bonds and the rationale for mobilizing bond instruments for the sector. Then reviewing recent trends in water bond issuance across regions, countries, issuer types, and market segments. And finally, exploring opportunities and solutions to scale bond financing for long-term investment in water security. Next slide, please. A bond is a debt instrument that allows issuers, such as governments, municipalities, companies, and financial institutions, to raise capital from investors to finance investment over time. Within the sustainable bond market, water is not a standalone category. Water investments are financed across different bond types. Green bonds support environmental projects, such as wastewater treatment and flood resilience. Social bonds can finance access to safe drinking water and sanitation, while sustainability bonds combine environmental and social objectives. Sustainability-linked bonds take a different approach by linking financing terms to sustainability performance, which may include water-related targets. Importantly, a bond does not need to be labeled as a blue bond to finance water security. Indeed, water investment were until now often financed through green bonds due to clearer standards and investor confidence. And blue bonds are emerging with the potential to help direct more explicitly capital towards water-related outcomes. Next slide, please. So why do we believe there is a strong case for scaling up bond markets to support water security? For the following reasons: because bonds are well-suited instruments to mobilize large volumes of capital over medium to long-term horizons. This aligns with the characteristics of water infrastructure, which often requires significant upfront investment, long asset lifetimes, and predictable returns over time. Bonds also provide access to a broad investor base, including but not limited to institutional investors, such as pension funds and insurers, seeking long-term stable assets that match their liabilities. Green, social, and sustainability bond instruments are increasingly prominent in the global bond markets, which represents a promising potential in terms of leveraging finance at scale for freshwater investments. However, challenges remain, including limited freshwater coverage in blue bond markets, access barriers for smaller projects, and investor concerns about revenue stability. Next slide, please. So for this report, we conducted a data analysis based on the Climate Bonds Initiative databases of green, social, sustainability, and sustainability-linked bond instruments. And 3 key messages emerged from recent trends in water-related bond issuance at global level. The first one is that the market is growing. Water and blue label bond issuance has grown significantly in recent years, with the volume issued in 2023 and 2024 alone representing more than half of the total issuance over the past decade. Second, despite this growth, water remains a small segment of the sustainable bond markets. Water and blue label bonds represented less than 1% of the global green, social, and sustainable bond issuance in 2024, which is actually paradoxical when you look at the alignment in theory between the instruments and some of the characteristics of water investments. And third, water investments are actually difficult to track in bond markets, especially within multi-label bonds, and because of the limited comparability in the use of proceeds classification, potentially resulting actually in an underestimation of the share of water investment supported through sustainable bonds. Next slide, please. So looking at the regional and issuer landscape, some key trends emerge. First, water and blue label bonds issuance remains geographically concentrated, but the market is expanding beyond its initial leaders. Europe dominated the market before 2021, with the Netherlands playing a particularly important role through consistent issuance from National Water Board Bank. Since a few years, other regions have become increasingly active, with Asia entering the market in 2020 and Latin America and the Caribbean driving much of the recent growth, mainly supported by water utilities and non-financial corporates. However, issuance remains limited in regions such as Africa and the Middle East, reflecting challenges including weaker capital markets, limited institutional capacity, and lower investor confidence. A second key point here is that the issuer landscape is becoming more diverse. Historically, government-backed entities, including public banks and water utilities, represented the largest share of water label bonds. More recently, corporate issuers have gained importance, particularly private and mixed ownership water companies seeking long-term financing for infrastructure investments. And the third point is that there is further potential to expand beyond traditional issuers, as subnational and municipal issuance can be scaled to finance local infrastructure projects, while supranational issuers such as DFIs can help overcome credit and capacity challenges. Next slide, please. Looking ahead, scaling up bond finance for water will require action on several fronts. First, attracting more capital requires addressing investor needs and reducing perceived risks. Investors are increasingly aware of water risks and are looking for long-term sustainable investment opportunities. However, broader participation will depend on sufficient project and market scale and the reduction of perceived risks. Governments and DFI can help by providing guarantees, credit enhancement, technical assistance, and anchor investments to improve project bankability. And at the same time, strengthening the capacity and creditworthiness of water sector issuers, especially public utilities and municipalities, and pooling smaller projects into large portfolios will be critical to create investment opportunities that meet investors' demands. Second, stronger market frameworks are needed to improve transparency, comparability, and investor confidence. Clearer taxonomies, standards, and impact reporting can help identify eligible water investments. Existing framework developed by organizations such as the International Capital Market Association, ICMA, the Climate Bonds Initiative, and DFIs such as the IFC have made important progress. Historically, they have been more developed for marine and coastal blue finance rather than for freshwater specific priorities, but this is changing. Investment in freshwater needs greater recognition and clearer eligibility criteria. And third, innovation in bond structures can help address the specific challenges of water investment. Municipal bonds and local currency bonds and pooled financing mechanisms can support smaller and locally managed water infrastructure while strengthening domestic capital markets. Performance-linked instruments, including impact bonds, among others, can help mobilize financing for water security outcomes by linking financial returns and to measurable environmental and social results. And we explore other innovative bond instruments in the reports, but I'll stop there for now. Next slide, please. And I thank you very much for your attention, and I shall now hand back to Mathilde.
Thank you, Aude. Thank you for this very clear presentation and especially for highlighting, both the key opportunities with the bond financing for water infrastructure, but also the practical barriers to make this happen. So now I would like to go to the panel discussion. And let me remind first to the audience that you can ask questions through the Zoom Q&A function through the panel discussion. So let me ask the first question to Louisina Berberian. And so as your second party opinion provider and as part of the rating agency doing sustainability analysis, which are, to your view, the key risks that are identified for water projects, and how are these risks assessed, and which are the current barriers you see to financing these projects at scale? Again, with the bond, discussion, we try to reach a scale. So, Louisina, please, you have the floor.
Thank you, Mathilde. Good morning, good afternoon, good evening, everyone. Very pleased to be part of this discussion. Appreciate the invitation. And I think Aude's message is encouraging in terms of the growth story on sustainable bonds. And we're very happy to be able to contribute to this conversation on how we continue to scale up financing on water projects. So as a second party opinion provider, we've recently released this year our 1,000 second party opinions on financing frameworks. Our second party opinions are covering around $1 trillion of US dollars in the sustainable debt market. So we've been able to grasp or gather some good experience, I would say, on sustainable water and wastewater management projects, which is the fifth category, which is the most commonly included in financing frameworks. And I would try to briefly sort of walk you through the main analytical considerations for when we are assessing this kind of projects. I would start by saying that it's relevant to sort of understand water assets or investments holistically. So understanding, of course, the regional specificities of water stress and its context, but as well, we cannot overlook sort of the environmental and the climate performance of that specific asset or infrastructure, right? And by we very much welcome, and we think it's needed, the development of metrics that are allowing for the monitoring of these different features. For example, in water supply systems, we would be focusing on how to minimize water losses. This could be measured on certain metrics or KPIs such as infrastructure leakage index or non-revenue water metrics. So we would encourage and believe that this would add transparency and some quantitative data to our analytical thinking. Or if we were to look at, for example, wastewater treatment assets, then we would place quite a lot of emphasis on the circularity part of the equation or the conversation. So the amount of sludge that is being diverted from landfills, the systems that are enabling some recovery of these resources, Is there a resource in the agricultural space? Is there some material recovery? Is there energy generation, for example? So we would say that sort of metrics and information, quantitative information on this regard are especially always welcome and encouraged. I think we would also have to think about sort of the dual role that this sector has, thinking about the climate transition, right? So it's around addressing adaptation and resilience by, having to manage water quantity and quality, thinking about, changing precipitation patterns, but also as well simultaneously having to tackle or address mitigation, right? By thinking about how to reduce the energy intensity of these assets and also the linked, I would say, greenhouse gas emissions as well, which are quite inherent to sort of water treatment infrastructure or distribution processes as well, no? So there has to be a way of being able to demonstrate or support sort of the operational decarbonization of these assets and sort of ensure there's good resource efficiency and in this way better position to attract capital. I would also say that there's the angle, of course, of physical climate risk management and also how could that impact potentially, for example, credit risk. So, this type of infrastructure is very much exposed to climate hazards, very clearly droughts, flooding, changing precipitation patterns, as I said previously. This would affect not only water availability, but also infrastructure performance itself. So the attractiveness of this infrastructure will really depend on its ability to sort of manage these risks. And usually what we tend to see as best practice is issuers that are conducting sort of forward-looking climate risk assessments on this front, which are aligned, for example, with the asset lifetimes that are designed. They are implementing adaptation measures, such as, for example, diversifying the sourcing, making them more resilient to droughts, or also flooding protections as well, depending on which asset we're thinking of, right? And I mean, I think this is quite important because, water stress could potentially impact, as I said, credit ratings, for example, thinking about local governments, and that's something that we've published extensively. That could be reflected or a consequence of several things, but such as reduced economic activity, it erodes tax bases as well. It could increase the budgetary pressures because there is a need for extraordinary investments or some emergency solutions. So we think that it's very much correlated and has a potential to affect credit ratings as well. Maybe I'll leave it there, Mathilde, and happy to follow up later on if there's any specific questions. Thank you.
Thank you, because your presentation shows exactly what we were trying to indicate in our introduction, that the water is really at the center of many things. Not only, as you say, it has a dual role in adaptation, mitigation, but the circularity issue and the link with the credit ratings of the sovereigns, etc. So it's thank you so much for this first answer. Now we'd like to go to Constance Chalcha from BNP. And my question to you is, like, despite the growth of all these bonds, the green ones, the blue ones, the sustainability linked ones, etc., we see that the investments remain underrepresented in sustainable finance, investment in water, in freshwater. So for you, which bond instruments have the greatest potential to really be able to scale water security investment? And what is the most structural gap preventing this to happen?
So thank you very much. So I think, first of all, what's very important to understand is a lot has been happening in the last 12 months. At BNP Paribas, we've been involved in over $1 billion of blue bonds in the last 12 months, with really a real interest and a growing interest from investors. So our guidance to issuers is that whenever the use of proceeds, the projects that are being financed are blue, and there is a sizable amount of capital going to those projects, a blue bond is extremely positive. And just to give you one example, because I think it's extremely enlightening, In May, we were involved in structuring and arranging a blue bond for Xylem in the US. So it was the first blue corporate bond in the US. It wasn't a private placement. When you were looking back a couple of years ago, we were doing blue bonds with private placement. Here we were talking about 500 million USD benchmark size going in the market. And what the issuer did is they issue a blue tranche and a conventional tranche. And what we saw is that on the blue tranche, there was a greenium. So there was a real price benefit in issuing blue. And what was striking for us was to not only see this price benefit, but also a benefit because it attracted a wider range of investors and investors that are really dark green, patient capital type of investors. So I think, first of all, we couldn't have dreamed about such a benchmark issuance 2 or 3 years ago at a corporate level. Not today it's happening. We are seeing a real appetite from investors. So whenever it can be done, because the issuer might be a water utility or might be in the value chain of water, focusing on water efficiency, we believe the blue has the best potential today because there's not enough true blue assets and there's a very strong appetite. Then we see also a lot of growing green bond use of proceeds that are going into blue projects. I think as what the presentation said earlier, but also S&P, water is really becoming an instrument, a key enabler of the economy in many, many places, but it's also becoming a key enabler of resilience and social peace, if you will, or ability to really have communities that are resilient. And as a result, we see a lot more investments going into blue. But when we're facing financial institutions or sovereigns or supra agencies that are financing many projects, among which blue, and those projects having quite a lot of different benefits, they would tend to opt for a green bond or a green format, which is a more Swiss knife, if you will. And within this green bond, we see this growing part of blue capital. So I think there's lots of hope. In the end, how to choose whether green or blue, or it really depends on the size of the projects that are linked to blue. And you need at least $500 million or euro to be able to issue a proper blue bond benchmark size. Otherwise, going for something which is more a Swiss knife, whether it's a green bond or a sustainability bond, is something which is very accepted. And in this case, indeed, what matters will be the allocation report to be able to demonstrate where that the projects are indeed benefiting blue projects. So all in, for me, I remain convinced that there's quite a lot of hope. We see a lot more interest from investors, and we see a lot more going into blue projects.
Thank you very much, Constance, for this kind of highlighting the opportunity side and the recent trends that are positive, and especially giving us an example where you have a blue bond that is okay at scale with a greenium. So that's what is important, and highlighting like the appetite, the existing appetite, whether it's in a blue bond per se or within a green bond. So that's excellent. Thank you very much. Now I would like to turn to Mohamed Sharaf from the Islamic Development Bank. So the multilateral banks, they work with governments and they work also with private investors to reduce the risk and to create a pipeline of bankable water security projects that are needed to mobilize capital at scale. So how do you do that?
Thank you, Mathilde. First of all, pleasure to be with you guys today. Try to be focused on that one. I think that's a very important question. Number one, I think it's an alignment issue that we need to focus on, just to make sure that there is big alignment between the governments and the private sector. That's very important to us. I think investor needs to see region-specific standards and indicators. That's very important for them in terms of to align their incentive to be on the So a lot of, I think, dialogue is happening right now between the multilateral development banks and governments and private investors just to set the scene. And I totally agree with my colleagues. There is a big hope on the blue. I think there is a lot of things happening on the world right now, given that the people now, or even on MDBs, are understanding how important is water security, and the circularity, as you mentioned before, and how it affects many other sectors as well. So I think the first thing, what we are seeing right now, MDBs are trying to make sure that this kind of alignment is happening, and those indicators and specifically regional indicators are being put in place. I think the second thing, which is much on the lower, is the project itself, because investors now, coming out from the green experience, from the green issuances experience, they're much also focused on the project itself. They want to see a proper risk allocation. That's very important for them. They want to see proper indicators, and those kind of indicators, I would say, play a critical role in crowding private capital. That's very important. I think now we've seen a big improvement on this area. Now, most of the, I would say, the issuers or even the project that is happening have a bit of clear indicator that is very consistent with the use of proceeds, and the UOP is very important in guiding those. I would say the third part that I really focus on, when we're looking at those, is that I've seen the kind of bonds that have been, shared with us, coming out from the green and the blue would be under them, or the sustainability link. I think the experience also on the impact, bonds, similar experiences happening out with some other MDBs, require us as an MDBs and even governments and even the private capital to look at donor organization. They are there. I think we need to lobby as much as of those donor organization on the water area, where they can upfront the coupon payments, or even give their guarantees about the success once the outcome is being reached. I think that's an area that also MDBs is really working on as we speak. The last thing I would say, blended finance packages. That's very important. I think we need to focus on the blending, as much as we can to develop fund water programs, I would say to fund it, but also to start thinking about funds that is really focused on that, where private capital comes in. There is a bit of, I would say, blend coming out from concessional, platforms or concessional windows. So I think those four parameters at what the MDBs are really focusing on at this point of time. But I share my optimism that we are moving. The blue label is becoming more and more important, especially on the developing markets, where they started to understand how important this to the circular economy. Thank you.
Thank you, Mohamed, and thank you for highlighting the role of the indicators. If we want to scale all these investments, we need proper, solid, robust indicators. Also for highlighting the role of all the guarantees or risk mitigation instruments that are critical, and so the role of blended finance there to really begin to have an asset class, that is moving forward. So also an optimistic evaluation somehow on the potential for these bond markets to finance water-related projects. So now I would like to ask the three of you a similar question, and I will give you really 2 minutes each to answer. So the question now is a bit a follow-up of the previous question. How you all said somehow that the interest of investors is rising, but how to really raise their awareness of water as a really investable asset class, and what it would take to attract more investors, thus higher capital flows into these bond markets, water-related bond markets. So I'll maybe go back to you, Louisina, first. 2 minutes.
Thank you, Mathilde. Yes, and I'm very happy to see how we are all resonating with each other on sort of our considerations and our entities are looking within the sector. So I think perhaps to add on what has been said and not repeat myself too much, I think, this is we need to address the fragmentation issue, I would say, in several countries in which perhaps the networks are sort of quite complex systems themselves. So there are often many operators, even within the same territory, thinking, for example, about distribution networks. We've published, for example, thinking about Italy. In the north of Italy, the distribution tends to be more centralized, more sort of entrusted to private operators. That sort of enables more economies of scale, greater investment capacity, I would say, improved efficiency, in contrast in the south. It's more of a highly localized system. There's more local authorities or smaller municipalities that are sort of, they tend to underinvest compared to more centralized players. So perhaps the fragmentation really needs to be addressed somehow, I would say. And this goes also hand in hand with sort of the budgetary pressure that we've talked about before. In the case that, there's no support being received by higher levels of government at a state level, for example, or sort of from the EU with some policy actions, then really the increase in debt in emergency packages is going to put some pressure on the budget, I would say. So I think we really need to think about the willingness and sort of ability to sort of build some global governance structure or infrastructure somehow. Something that is sort of not only sharing real data live, but that there are some enforceable treaties, that there are some sort of arbitration that is binding. There's a lack of framework that it's really would have to look at this as a more of a unified front, I would say. I'm not really, there are so many fronts that need to be tackled, but I think this is, very much the starting point. And I know you've covered this plenty in other webinars, sort of the blue bond label, going beyond attracting those thematic investors. It is indeed often too small, I would say, but, and often being mixed with green bonds, I would say. So I think we need to continue to sort of be able to support the blue label and also show perhaps the co-benefits from the social angle as well. There's social indicators and co-benefits. It is very much part of the sustainability agenda and discussion so far. And, it's a very essential sector that we're talking about. So perhaps bringing this more with as well metrics is something that hopefully can spur or support this further, if you agree.
Interesting. First, from this fragmentation context, how to deal with it. Your idea of having a global governance infrastructure with real data, etc. It's music to our ears at the OECD because it's a bit what we're doing in many areas. So a good reflection for us following your intervention. Now, I would like to go to Constance with the same question. So, how to attract more investment, more investors, basically, in this asset class?
So I'll try to build on what Luisina said, but indeed, we're seeing a lot more corporates, really water utilities coming to the market, and I think this is important, and we need more of those. However, I think for many institutions and sovereign, today, they still don't have the ability to track what is blue investment. So it sounds very silly, but I'm going to say the cliche sentence, which is what gets measured gets managed. To Louisiana's point, we need metrics, and in many institutions, many areas, there's green tags, there is social tag, there is no blue tags. So I think a very basic, down-to-earth industrialization way of really understanding what goes into water-related projects, but also how to increase those amounts is really to measure it. So for those of you who are part of a financial institution or sovereigns, please make sure that you start adding to your tags a blue tag to be able to track this. This is absolutely crucial. Now, I think going back to the topic of the southern and the emerging market, which is, I think, very important, beyond blended, we've seen interesting experiments where water indeed is very fragmented. It's not necessarily fully addressed through public investment. And we start seeing corporates investing in desalination and then redistributing part of the overproduction of water to the local communities. And I think this is for me a very interesting angle and experience where even if you do not have blended finance, there is economical actors, corporates that have a true need to ensure that they have plenty of water and they have water security and resilience. And so they are all considering in desalination, private investment. And in this case, they can become themselves in a way, somehow of a utility redistributing locally. So I think there's many diverse way to address the water topic. For me, again, there is no issue when it comes to investors' appetite. Provided a project is bankable, investable, there is a very strong appetite because there's a realization among the investor community of the crucial importance of water, almost as important as the energy in many areas.
Thank you, Constance. So basically, my question was not the right one. There is appetite, but how to realize it somehow? So again, your answer on the measurement agenda, which is very important. And I like your example how we can also not rely only on blended finance, but with like purely private capital in some sectors that could after add themselves to the distribution, actors. So thanks for this example. And now I will go nevertheless with the same question, even if it's a bit not the right one, but to Mohamed, how to raise, at least the right one should be how we might ensure that with this appetite that exists, how we can realize it and make sure that we have greater flows going into water investment through the bond market. Yeah.
No, exactly. I tend to agree the appetite is there. We can see it. Yeah, I think one of the major issues that we need to really look at the blue label is how to synergize finance and partnership and to make sure that the label itself get the attention that is needed, compared to the other labels. Because the label itself sometimes is being under the green, whether it's a use of proceed, and I think we've looked at the presentation, social. I think when we get direct label, on the blue, and we start, as we discussed a lot about the indicators, about the project risk allocation, and the investors would be there. So I think more work needs to be done on those two areas. One of them, how to highlight the agenda of the water security. I think that's very important. That is really coming and a necessity on the emerging markets as well, maybe, in a more, I would say, important matter. That's number one. I think number two is that global investors right now, they want to see technology as well, so they want to see that it's not just the governance of the water itself, of the water security. There is no waste happening there, coming out from their investors because from their investment. So I think also the governance part of it, which a lot of dark green investors or even blue investors at this point of time, they want to make sure that their fund or capital allocation are being done on the right format. Technology as well, we didn't touch upon that. I think a lot, coming out of what's happening on the AI space, and tracking, and all of this needs to be addressed and be on the forefront of the water security when we're talking about the blue label itself. So I think I share with my colleagues, we've seen it recently, even Emirates MBD in the region here, it's a big bank, in the region, they've issued their blue, bond, which was really subscribed in a very good format. So that's not even, monopolized by Europe, but we can see very basic, steps coming out on the region. I think the partnership between finance and, because, there needs to be more awareness about how important the blue label is, the indicators that we have spoken about, and also the rise of technology makes a lot of investors very much comfortable that there will be a tracking to those indicators. It is real time. They're able to measure the impact that when they put their investment on the blue label. Thank you so much.
You, Mohamed, you put two new dimensions, the working at the label itself and this technology point, and with the EI development, etc., what we can do to track and to somehow increase the investors' confidence in their investment. So now I will give you really, even not a minute, maybe 30 seconds. If you have to pick one priority, to enable this realization of this appetite that exists. We all agree it exists, but if there is one change to be made, what would be your priority change? Again, maybe Mohamed, you speak first, otherwise it's unfair.
No worries. I think clear indicators. That's
Indicator.
the word that I would say, the blue, and I think, when we talked about the blue label, and how it needs to be indicator that is tagged, I think that's a very important. So that's would be the priority. The alignment also, as well as I spoke on there needs to be a very much alignment. Thank you.
Only one priority. No, Constance, one priority from you.
I'm going to echo Mohamed. I think we've been trying to make the blue label a standalone color because it will really send a very strong signal to the market of the importance of water investment. So making blue not a shade of green, but a real standalone segment.
Okay, thank you. Very nicely said. Make blue not a shade of green. And Louisina, before we go to the audience for questions.
Thank you, and thank you, Constance, for that reference to our shades of green. I suppose. Yeah, I think I would have to echo my fellow panelists here as well, because I think it's the most tangible. It provides confidence. It provides comparability for investor base, and I think that's what we need in the water sector, right? That's the way we sort of can get closer to thinking about mitigation projects with GHG emissions, and that's somehow also the challenge, thinking about the social projects, right? And how we can make indicators that are more comparable, more sophisticated, and more impactful for those investments. So I think with Blue, we are a bit in a better position, I would say. Somehow we have that quantitative data. We just need to make sure it's standardized and comparable to make investors' lives easier. Even if, it will stay at, considering the fragmentation and so on, we won't have like very large tickets. I think we could still get there with some harmonization and more standardized data. I really want to echo the same message. Thank you.
Okay. Thank you. Very interesting and really music to our ears at the OECD, having more harmonized data indicators. That's perfect. No, I have some questions from the audience, and we have let's say 10 minutes left. So the first question for Constance from Daniel Chemi. So the question is the following. Green bonds appear to almost entirely focused on traditional infrastructure like wastewater treatment plants. What can be done to grow bond issuance for nature-based solutions for water security? And who are the leading players?
Oh, okay. So I think indeed, very often in many countries, wastewater treatment, and I think as Louisina was saying also, efficiency, avoiding leakage is usually a priority because it gives immediate or near instant results. Nature-based solution sometimes might take a little bit more time to deliver fresh water of the quality which is required. However, we are seeing very, very interesting example where nature-based solution can have a very positive impact on land water. We've been discussing typically with Chile on such projects. I'm not sure there is it's difficult to say about a leader because I think it's very dependent upon each country, and what works in a given country may not work in another country. But today, I think it's not either or. I think we need both. And while there is a continued flow of capital going into water treatment, water efficiency, and desalination, we also need to invest in a nature-based solution that brings also additional benefit beyond pure water production.
Constance, and we are working on these nature-based solutions for water in some regions. So yeah, stay tuned. We might come back to you, the audience, with interesting results next year also.
And,
I have another.
maybe one more thing,
Yeah?
Mathilde, because I think it's important. Mohamed was talking about relying on philanthropy. The beauty with nature-based solution, especially if they are able to capture carbon, is that we can rely on carbon credits to finance upfront part of the project. I encourage all of you to look at what we did with the World Bank on the spec boom case, which is not water related, but also actually will help on water. So it's not a direct benefit, it's a co-benefit. So think about this. I think that's a very interesting way to finance upfront some project.
Thank you. So we are opening an all different agenda there.
Exactly.
We could have a series of discussion on that. So another question that is not targeted at any of you, but from Peter Simpson. I heard about the potential role for standards. If you were running the international standard organization, which area would it be most useful to start with to assist with scaling up, deploying finance for water, etc.? So taxonomies or frameworks for national water strategies? I don't know if somebody wants to answer this one.
I have a very short answer so that my co-panelists can then talk. I think we have plenty of taxonomies, to be quite honest.
Don't need
we
more
don't need
okay.
another taxonomy. However, water strategies as part of national adaptation plans is absolutely crucial.
Okay. May I ask the two other panelists, like
I
Louisina
couldn't
and
agree
Mohamed,
more.
if
Yes.
you agree?
Yeah, I
Okay.
think that would really cover it at a more sort of, I think at an, I would say more strategic level, and we definitely have too many taxonomies today. So I think thinking about something equivalent to NDCs and so on, I think would be what I would start from. Yeah, thank you.
Okay. And Mohamed, you agree with your two co-panelists?
Total. I spoke about standardization, and that that's something that we don't need to make it more complicated for investors.
Okay, great. So great question, because it added one element and very clear answer from all the panel. Now I have a last question for Aude on your presentation from Colleen Heron. So the question is the following. In the report, when talking about de-risking instruments in water, what type of investment do you see as the least risky? Are you considering green and gray infrastructure as well as the softer governance opportunities? And how does the risk perception vary across those potential investments? It's a long question.
So, yeah, in the water sector, actually, the lowest risk investments are typically those backed by stable water tariffs, long-term public contracts, or regulated authorities with predictable revenues. So the key determinants is not so much whether it's a green or a gray infrastructure. Green infrastructure can also deliver value and high value to investors when but they often need blended finance or public guarantees because some of the part of their benefits are harder to monetize. And indeed, the risk perception also differs between investors. Commercial investors tend to perceive green infrastructure as riskier indeed because returns are less direct and often materialize over a longer time horizon. And by contrast, DFIs and impact investors are generally better positioned to value these broader resilience and sustainability benefits and can help reduce risks for private investors, as I said, through guarantees and blended finance. You're muted, Mathilde.
Thank you, Aude. I don't have further questions, and it's about time that we wrap up the conversation. So thank you very much, Aude, for your report and for setting the scene on this discussion. Thanks, Louisina, Constance, and Mohamed for contributing to an interesting discussion. We have some very clear message. I will try to say, of course, it's a very rough summary, but clearly, there is a potential, there is an appetite. So what we need to work on, there is a big measurement / indicators agenda. There is clearly also in terms of we need to to make the blue as a standalone color, if I well understood, all you said about blue tagging, etc. We have a governance agenda, we have a technology agenda. So a lot needs to happen, but apparently a lot is already happening. From the first sentence of Louisina, I mean, things are changing as we talk. So we need maybe to hurry up in publishing our report, Aude, so that our data is not too outdated. And but we get a very clear signal for some further work going forward that could help this agenda in terms of measurement indicators, governance also, I think. And this AI/technology issue is also of interest, I think. So I thank you, all of you, particularly the panelists, for your insights on this very important discussion, because I think we all agree with the first, statement. The water agenda is very central to many other agendas, the economic one, the resilience one, the health agenda, etc., the productivity agenda. So, and there is appetite from investors, like make this happen through a couple of actions at the policy level. So thank you very much for your insights, and Aude again for your presentation, Walid for your introduction. And do I need to say something specific about the next Green Talk? I'm not sure. We have a next one in the coming weeks. So what I need to tell you is that there will be a roundtable, the 14th roundtable on financing water that will take place end of September in Rome, in the lead up to the UN Water Conference 2026. So if you are interested in learning more, not only on this report, but all our work on water, please visit our website. You will have all the reports, the other resources, etc. And also, please don't hesitate to comment on the quality of this Green Talks webinar. There will be a survey that will appear on your device after the webinar ends. So please give us your feedback. It helps us to getting better. And once again, thank you all, the panelists, but also the audience who have been engaging proactively, for your good questions and for listening attentively. Thank you very much. Have a good day.
Thank you.
Thank you.
Thank you, everyone. Thank you. Bye-bye.
Bye.
Bye.